Have you ever stopped to think about what life really looks like after retirement? After spending your entire life working, raising a family, paying bills, and surviving the ups and downs of everyday life, what kind of support do you actually receive when your working years finally come to an end? Today, we're breaking down the truth behind the Australian pension system in the simplest way possible. So whether you're close to retirement, planning early, or helping someone understand it, this video will guide you through everything you need to know. When most people think about the pension, they imagine it as just a small payment from the government. But in reality, it's much more than that. It's meant to be a safety net, a support system for people who have worked, contributed, and lived their entire lives in Australia. But getting the pension isn't automatic. There are eligibility rules, income tests, asset tests, residency requirements, and many small details that can affect how much you actually receive. And that's where confusion begins. Let's start with the basics. In Australia, the pension is usually available once you reach age pension age, which for most people is now 67. But age is only one part of the equation. You must also meet residency requirements. This means you must have lived in Australia for a certain number of years, usually at least 10 years, with at least 5 of those years being continuous. If you've lived overseas or moved in and out of the country, this rule becomes very important. Then comes the income test. This test checks how much money you earn from work, investments, rental income, or superannuation. If your income is above a certain limit, your pension might be reduced. The idea is simple. If you're earning enough to support yourself, you get a smaller pension. If you're not earning much or anything at all, you get the full amount. Many people are surprised to learn how much even small investments or part-time earnings can affect their pension rate. Next is the assets test, and this one is just as important. Your home is generally exempt, so the house you live in doesn't count. But other assets, like savings, land, investment property, caravans, shares, gold, or even money in the bank, can reduce your pension. The more assets you own, the lower your pension payment becomes. Many retirees realize too late that their assets indirectly control their pension amount, even if those assets don't produce regular income. The pension itself is paid every fortnight, and the amount is adjusted twice a year to help match the cost of living. Many people also qualify for extra benefits like concession cards, medical discounts, electricity rebates, and other support programs that help reduce everyday expenses. These small extras might seem minor, but over time, they save pensioners thousands of dollars every year. Planning for the pension is as important as understanding the pension. Too many people wait until they're already retired to figure it out. But the truth is, the more you prepare in your 40s, 50s, or early 60s, the smoother your retirement becomes. Even knowing small things, like how much money to keep in superannuation, when to sell an investment, or how to arrange your assets, can completely change the pension outcome. One of the most overlooked points is that the pension isn't designed to replace your full working income. It's designed to help you maintain a basic standard of living. This means you'll have a more comfortable retirement if you combine your pension with superannuation savings, investments, or part-time work. Many people choose to work a few hours a week in retirement because the work bonus allows you to earn extra money without losing pension benefits. Now here's something people rarely talk about: the emotional side of retirement. After decades of routine, work, and responsibilities, retirement can feel like stepping into the unknown. The pension gives more than financial support. It gives peace of mind. It ensures you are not left alone, without income, at a point in life when stability matters the most. It gives dignity. It gives security. It allows seniors to live with respect after spending a lifetime contributing to society. As you or your loved ones get closer to retirement age, understanding how the pension works becomes incredibly important. Knowing your rights, knowing the rules, and knowing what you're entitled to can make a massive difference. The Australian pension system can seem complicated, but once you understand how income, assets, and age requirements work together, the entire picture becomes clear. So, if you want a retirement that feels safe, stable, and stress-free, start planning early, stay informed, and make decisions that protect your future. Because after a lifetime of hard work, you deserve nothing less than comfort, support, and peace in your golden years.